following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me. Folks, I absolutely love being here, and it is Terrific Thursday. Hopefully you're off to a terrific start of your day. It is not just Terrific Thursday. This is the beginning of Father's Day weekend. Today kicks off the U.S. Open at the Olympic Club in San Francisco. They are playing the lake course, an absolutely beautiful course out there. Hopefully the fog conditions, I don't know if there's fog out there like there normally is each and every morning, but it should be a good, true test of golf out there, and just in time for those of us fathers that love golf. So now I prefer to tape it and go out and actually play golf. So hopefully you do the same as well. You want to be able to take care of yourself. If we take a quick tour of the markets here, you've got across the world, the markets are down. You've got DAX in Germany off 35 points right now. The FTSE off 36 points. Over in Asia last night, you had the Nikkei down 19 points. Shanghai off 23. The Hang Seng off 1%, a full 1%, down 218 points last night. Well, I shouldn't say they're down around the world. You do have in Spain, the IBEX up about 31 points right now. Of course, our futures here in the U.S. are up as well. Right now, you got the Dow futures up about 18. The S&P futures up a couple points. The NASDAQ futures up 3. Russell 2000 struggling to get out of the gate, but we know that the small caps, Russell 2000, is a weak link out there. Jobless claims were reported this morning at 8:30 a.m. sharp. And you had jobless claims up for the week, I believe it is, 6,000 up to 386,000. Of course, the didn't really do much to move the markets out here. So we'll take a look at those markets. You can give us a call at 877-927-6648. Now, I don't know about you, but, when it comes to Father's Day, isn't the question always, what is it that you would like? What should the kids get you? So let me give you an idea for what I consider to be the greatest gift of all. And I think the greatest gift that you can actually give somebody, now you got to kind of get your head wrapped around this, but the best gift that you could give somebody is your own personal development. That is absolutely the best gift, in my opinion, that you can give anyone. I used to say, maybe you said this as well, maybe you currently say this. I used to say, if you take care of me, I'll take care of you. Have you ever said that to anyone? Now, if you really step back and you think about it, maybe it sounds pretty good, but the reality is that's a conditional statement of love. And love should be unconditional. I love being here with you. There are absolutely no conditions. You can call me. You can talk to me about anything. You can rant. You can rave, as long as you're cool about it. But, there's no conditions, and love shouldn't have any conditions. And when you're saying, I'll take care of you if you take care of me, isn't that really an expression of love? Isn't that really what life is all about, what Father's Day certainly is all about? So I changed that conditional statement. All you have to do is just make maybe small little changes can make the largest difference in your life. I'm hoping that here at TFNN, that we're going to make just the smallest change is going to make the largest change in your life. We do it each and every day. Today is Thursday. So on Thursdays, what do? We have the Money Master Show. Tom and I will be together after this show. Then we go to Kate Stalter out in Santa Fe, Larry Pesavento doing the Futures Hour from 12 to 1. Back to stay out in California with Ken Shreve from 3 to 4 and all the way back out here to downtown Clearwater, right on the beach, to TFNN for the Tom O'Brien Show. So, it's really all about personal development. And so smallest changes can make huge differences. So what was the change that I made in that statement, if you take care of me, I'll take care of you? It was really simple, folks. Because now what I say, I will take care of me for you if you take care of you for me. And that's really what it's all about. Maybe that's the message that you could give to your kids, because what's it really all about, folks? When I when I share with you, my thoughts, and I've got all kinds of them, and they're all about being able to, it's not about being able to inspire you. My message is not to inspire you. What it is to help you lead an inspired life. Small little change there, but I think the hugest of changes. So why don't you give that some thought? Because if you're saying, hey, I'll take care of you if you take care of me, too conditional. Just change it around. Write this down. I will take care of me for you if you take care of you for me. That's what it's all about, folks. It's certainly what it's all about here at TFNN. I will take care of me for you, folks. Absolutely. Let's go take a look at these markets here. You can watch us on Tiger TV. All you have to do is go to the homepage of TFNN.com, click on Tiger TV. You can always catch an archive of this show here on Channel 9. And we're going to do something a little bit different today. We're going to go ahead and we're going to do some mining. Now, what do I mean by mining? We've been at a pretty choppy market. We know we've had the first leg of a larger leg down in an A to B equals CD move. And so what you want to do is you want to just start preparing. So what I thought I would do is I've got the current list of the IBD 50 stocks out here. And I thought we just simply, maybe the course of the next couple days or however long it takes, we'll just simply go from 1 through 50 and take a look, and maybe we'll tick them off our list as looks like there's some damage there and not anything that you'd like to trade. Why would you want to take a look at these? Well, these are cult stocks. These are stocks that certainly have good growth. The IBD's done a bunch of homework for us. We want to take a look at stock charts so that when the market does turn in either direction, because right now, it's been pretty much moving sideways here in a choppy market. Pretty decent intraday trading out there, but we know that most of you aren't interested in intraday trading. Most of you are interested in more medium or long-term trading. And with regard to the medium or long-term trading, if you haven't ordered your free report that I put Successes and Numbers Game, it's really about understanding how to make your decisions with regard to long-term financial planning with regard to funds that you are in the stock market. So go to the homepage of TFNN.com. We're getting close to 1,000. That was my first goal, and we should be there, maybe over the weekend, certainly early next week. And please do yourself a favor, give somebody that report. Print it out and give folks that are in your life that report, just simply so that they can give them the link so that they can understand exactly how to really manage, because it's not taught in school. And that's a great gift that you could actually give to somebody. So go to the homepage at TFNN.com and do that. Now, we take a look at the ES Mini. I've got the 30-minute chart here on the screen. What is it that you can see? What you can't see is that off of the lows, certainly, that were made coming into June 11th, the low down there at the 1297 point. What you see is you do see higher lows. You see higher lows. You see slightly higher highs, just slightly higher highs, more of a consolidation pattern. But you are seeing higher lows. What's that say? It says to me that what the ES Mini here wants to do is it wants to trade higher. It's trying to trade higher. Of course, yesterday you had the S&P off 10 points. You had the Dow off 77 points. It has been the up and down. It has been the great roller coaster of life here. And why is the ES Mini trying to make a higher high? Well, all you've got to do is the first place to start. We'd start over with the King. Let's go take a look, see what King Dollar is trying to do. And what King Dollar is trying to do is get back inside the lower part of its range. What do I mean? Good question. What I'm talking about is the January 13th swing point high, 82.04. You're trading at 82.07. They've tried pushing King Dollar down the last 3 of 4 sessions. The first attempt came on Monday when we came into these markets. They tried pushing it down, really was during overnight trading. And, of course, that was all about the rain was not going to be falling in Spain. It wasn't going to be falling, but it was going to be falling with some kind of dollars coming from the European Financial Stability Fund. The problem is they don't have any dollars in the European Financial Stability Fund. So that was kind of a poker game, and the bluff was called on Monday. Now, after all those fireworks clear out, you got the U.S. King Dollar doing what it's supposed to be doing after it made a 1.272 butterfly pattern. And that is at least making a pullback to the 0.382 retracement area. That's just a dead cat bounce. Excuse me, where would that get you back to? Well, what that would get you back to just on the dead cat would be in the 81.55 area. To a certain extent, that was really accomplished on Sunday evening. You had King Dollar get down to 81.72. So, close, no cigar, but pretty darn close. Now, what you really do have unfolding here in the U.S. dollar index is an A to B equals CD down. You can see that pattern if you're watching us on Tiger TV. Just the 1-to-1 takes you down to 81.24, where the U.S. dollar index wants to really trade back to 80.77, 80.58. That is the range that it wants to get to, but it has to bust 82.04. Trading right now at 82.04. So we'll see how the day is going to go now. With the king, that means what's the queen doing? That means the queen is trying to move higher. That means people are unwinding their short positions in the euro right now. We're getting ready for another weekend in the summertime. You can see the currency market. When we take a look at the euro, take a look here at the longer-term chart. When I say longer term, we were looking at a 30 daily chart on, we're taking a look at a daily chart on King Dollar. Here we come to the euro. We're taking a look at a 120-minute chart. Here, clearly, what the euro is doing is making higher lows and higher highs. Expect that what you will see here with the euro is it'll first make its attempt up into that 126 area. That was the open on Sunday evening after the great news that Spain was going to be saved. Doesn't really matter if Spain is or isn't going to be saved. The euro is still going to chug its way, make its way higher. It's possible that it's making a larger A to B equals CD up. Now, the first A to B equals CD up really started off with a low here at 10 a.m. on the on June 1st. That low being 1.22866. B point was right out here at about 10 o'clock in the evening on June 4th. C point moves back down into the 8 a.m. time frame on June the 5th. What you can see, a 1-to-1 A to B equals C to D. It's exactly where the euro opened up. And then what did it do? It did the fade away pattern. It pulled back into really the last swing point, couldn't bust through at that swing point being at 10 o'clock on June the 8th, and now it's just continuing to move higher. What you can see is if you just take a look at the open on Sunday, or the high on Sunday, it wasn't really the open because the open on the euro was right in the 1.26522. It did get a little bit higher up into 1.2671. You can see what the euro did yesterday as we were on the show here. What the euro did yesterday at noontime sliced right into the 0.618 area of the move down. It says the euro wants to at least get to the 0.786 retracement area, folks. 877-927-6648. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the #1 reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of tfnn.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at tfnn.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks, and absolutely the greatest gift that you can give someone is your own personal development, and there's no better time to do that. Take advantage of our Tiger Dollar promo. It's going on right now. I believe it expires next week, so no time to sit on your hands. It's a great opportunity for you to truly develop your skills. You've got an hour and a half, 90 minutes with each of the contributors here each week. So on a weekly basis, beginning the Wednesday after July 4th. So it'll be 2 weeks from yesterday. And the first one to kick it off is going to be Larry Pesavento. He's going to be doing Trade What You See. Then you've got Ken Shreve doing Finding New Market Leaders. On the following Wednesday, I'll be doing on July 25th, really teaching you about the 5 key disciplines for being able to trade. It's going to be including money management. It's going to be understanding system expectancy. So we just simply continue on every other week. Not every other week, every week, every Wednesday, an hour and a half webcast that each person is putting on. So for those of you that do have subscriptions with TFNN, you absolutely want to go over there and take advantage of this and make your money work a little bit harder for you. If we take a look at what's going on in the pre-market before we start taking a look at some of the IBD stocks out here, in the pre-market, you've got Korn Ferry, KFY. They're down 6% this morning. They are down based on some revenue. Their net income, $12 million versus $20 million a year ago. Revenues, $207 million versus $205, so up just slightly. Trading down about, as I say, about 6% in the pre-market. You've got on the upside, now I'm not going to go take a look at the stock, but I'll at least report. You got Mad Cats Interactive. Sounds pretty cool. However, it's a stock that traded yesterday at 46 cents. MCZ is the ticker symbol, and in the pre-market, not that it's really worth a whole lot, up 24%, trading down at 57 cents right now, but not exactly like there's a huge number of shares trading. Now, you got Kroger. I used to, yesterday I was talking a little bit about making sure that you understood that maybe what you're doing right now, isn't your favorite thing to do. You don't like doing it. And certainly one of the lessons that you like to be able to pass on to your children, especially as they are, depending on what stage they're at inside the working environment or even at school, maybe they're taking classes that they don't like, but what they need to understand, it's all stepping stones, it's all stepping blocks, and you have to be able to love the opportunity because that's what's going to open up the next door. One of the doors, and I've had many, many manual laborist jobs there. They've all been stepping stones. They all, quite frankly, led to me being right here doing the thing I enjoy most. One of those was actually being a bag boy at Kroger's and Great Scott, both of those grocery store chains up in the Michigan area. Well, they're beyond Michigan. Of course, Great Scott's no longer there, but Kroger was one of them. Kroger announcing that they're going to be doing a stock buyback. So their stock is up a little over 4% right now. They're going to do a $1 billion stock repurchase program. Ticker symbol on that, folks, is KR. Then you've got, as far as what else is on the move here, not really much. Pier 1 Imports closed out at $15.58 last night. They're trading out at $15.78 right now. Let's see here. Q1 net sales, $361 million versus $334, and I don't see the income's not popping off my screen at me. Not really trading up that much. You got Winnebago Industries, WGO. They're up about 2% this morning. Closed out at $8.99. Last trade firing off at $9.21. I don't really see any reason other than maybe it's just the summertime, and maybe that is a seasonal stock. As far as the futures market now, just down a little bit from when we first opened the show. You got the Dow up about 17 points, ES Mini up a couple. So let's go take a look at, let's go searching for treasures out here. And again, what I've got up on my screen here, I've just got the top 4 so far of the IBD 50. So let's go hunting. Let's go take a look at, these stocks, how they have behaved in the marketplace. Maybe take a look at some support areas. And the first one that we're going to start with is Liquidity Services, LQDT is the ticker symbol. They closed out at 58.53 yesterday. If we take a look at yesterday, what they did, came back with 807,000 shares. That is going into this little gap up here, this little sign of strength, its most recent sign of strength that it had on May 3rd when it gapped up with 1.7 million shares. That was a sign of strength. You then had several trading sessions, maybe 2 weeks later, you had a sign of weakness. Came down with 1.7 million shares on May 17th. So up with 1.7, down with 1.7, really setting up a area here of potential consolidation, assuming that that is going to hold. There is a gap out there that is not filled. The top of that gap, May 2nd, the top out there at 56.05. That's on Liquidity Services. If it breaks that gap, if it starts to pull back with volume, where Liquidity Services will actually trade down to, folks, where it would be a buy, is at $31.83. That's on the number 1 IBD stock. 877-927-6648. We'll be back, see how these markets are going to open. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And they're off to the races. You got the Dow out of the gate up 15 points. S&P's up 2. Composite off 1. You got the small caps up 1. If we take a look at what's popping and what is dropping out there, you got Edwards Life Sciences leading off up $3.70. That's up 4% right now. You got Family Dollar Stores, FDO, up $2 and change. Quest Software, QSFT, up a couple of bucks. That's up 8%. You got Jive Software, up 6%. That's up $1. Darden Restaurants, the Red Lobster, Olive Garden folks, and Seasons 52. That's a great restaurant. DRI, the ticker symbol, they're up $1. That's up 3%. You got FXCM. They're up 8% this morning. You got Nike trading up 60 cents. That's up 0.6%. That's what's leading on the upside. You do have on the downside, grooving to the downside, you got Royal Gold, RGLD, pulling back this morning. We'll certainly take a look at that. They're down 3%, down $2, almost $3 here. You've got 3D Systems pulling back, down 6%. Don't know what they released out here. If anything, we'll go see what kind of volume is coming out of 3D Systems, because that is a not a bad-looking chart. As I recall, you've got Credit Suisse, CS, down 8% this morning, off $1.70. Apple down $1.33. Not really much going on there. Adjurian, AEGR, the pharmaceutical company, down 9%. That's off $1.56 this morning. And then Checkpoint Software, CHKP, off 1% as well. Smithfield Foods, though, they're off 4%. So let's go back and take a look at liquidity services. So, because you don't want to just take a look at the daily chart. Especially if you're looking for a longer-term trade. You absolutely want to be able to step it up and take a look at the weekly and the monthly and get some type of signals out here. Now, stock hasn't broken down. You would have preferred, after seeing that breakout, certainly on May 3rd, not to see a slight sell-off and a breakdown on May the 17th. But that's what the stock chart did. So now we go ahead and we go back. And what is really an important area here is the low. You're going to want to watch this. The number one stock inside the IBD 50, again, LQDT, and the 5751 area, which I don't believe has been tested yet. Let's see if it came back here. 57. No, got tested right to the penny on May 18th. 674,000 shares versus the 1.7. So it makes sense that it would go back up to the highs. Of course, at the highs, there is no volume. So Again, what you're interested in here is understanding how the lows. Now, if we go take a look at the daily chart, and it is only Thursday, not the daily chart, the weekly chart. It is only Thursday. What you do see going on inside this chart, and it is the first time on a weekly chart, at least, let's say, going back to $6, where what you see here is a bearish engulfing candle. So if you get a close this week below, let's see, the open last week was at 65.47. You're trading at 58.80 right now. Then what that's telling you is that's giving us a signal that the stock wants to pull back. Now, you have to get a confirmation of that with a lower close next week. And might be tough to do during a week when we, next week, do we go into July 4th next week? Is that, might have my dates off here. That might be July 4th next Wednesday. No, it's not next Wednesday. It's 2 weeks. 2 weeks from now. I take that back. We'll do just a quick rewind. Okay, great. So what you do want to do is you want to pay attention to this because, this is setting up a bearish engulfing candle. That would suggest lower prices. And the lower price on the weekly chart you'd be looking for is a test of May 4th. Where it did 4.1 million shares. Now, so far this week on the pullback, only about 2 million shares. So that's setting up nicely. You've got really a couple areas here of support for this stock. If the 52.10 doesn't hold, the next level that it will trade to, and the most likely level, would be down into the 40.96 to 38.50 range. And so that is on LQDT, and that is one you'll certainly want to pay attention to. Now, that was on the weekly. I didn't really think I saw anything on the monthly. I'll punch it up on the screen here for you. And really not anything major on the monthly, with the exception if you had some nice volume up at the highs last month. So on the daily, you didn't see anything, but certainly on the monthly, you do. It did 14 million shares last month, and that's a good sign for this stock. You would like to see this thing pull back properly, maybe even make A to B equals CD pattern to the downside in order to be able to pull the trigger on this. So let's go take a look at number two. Number two on the IBD 50, Q-Core is the ticker symbol. If we take a look at Q-Core and QCOR, what Q-Core does, folks, is good question. Q-Core, it's a biopharmaceutical company. They provide prescription drugs for the treatment of multiple sclerosis and a few other things out there. Some spasm indications. So let's go take a look at this stock trading out right now at 46.25. And when we see this equity here, this had a breakdown. So the last sign of any kind of volume out here happened to be a downdraft on January 11th. Now the high there is 42.12, low of 34.80. You're trading above that right now. But as this thing moved higher, what you can see, it moved higher on basically air, no volume. Had volume downtown, but it did not have any volume to the upside of any significance. In fact, if you take a look at the next little downdraft it had on March 9th, 2012, coming down with 6 million shares. It made another day of weakness, happened to be April 25th. Makes sense, 4.6 million shares. So this thing is setting up more for potential short. I'm not saying to short this stock. I'm absolutely not. It's more set up for a pullback is really the words that I should use there. Let's see. It looks like an expansion of swing points here. Let's test that out. And sure enough, it is a 1.272 expansion of swing points. And that's one of those Fibonacci numbers that you absolutely want to make sure that you're paying attention to. When you see that, that is a normal area for when a equity expands for it to start pulling back. That's what you're taking a look at Q-Core on the daily chart. That'll help you to understand if you're inside the equity to expect a pullback, and then you're going to want to watch, the type of volume. So far, not so bad because the volume on June 12th was 3.5 million shares yesterday as it came off of that 2.6 million shares, so not too bad. But you do see the 1.272 expansions between swing points. The swing points I'm talking about are the May day. May 1st was the high of 46.84, and it pulls back into a low going into May 18th. It's that, and that low was 37.77. If you take that dollar difference, multiply it times 1.27, add it to the low of May 18th, that'll take you up to that 1.272 expansion price point of 48.98 or thereabouts. Now, let's go ahead and put this on a weekly basis. So let's go take a look at this stock on a weekly chart out here. It's making one of Rick and Basil's dojis. Of course, the week is not out, but this stock for the week opened up at $45.99, trading out at $46.17 right now. Again, it is taking on it did not get all the way down to the downdraft from January 13th. The high out there, 44.18. So it has not tested that area this week. If you do see this week, this thing close inside the 44.18, what this does tell you is it wants to get down and test the low of 33.66. Pretty important to know if you happen to be in Q-Core, I would think, because do you want to take the pressure of going from $46 down to 33. Hasn't done that yet, but if you do get a close this week inside that volume bar, let me just refresh my screen here, make sure everything is updated volume-wise. There we go. That is what it is saying, and you can see that on this stock here, I would kind of take this one off of my list. This does not have as good of a setup as the number one did that we took a look at, liquidity services. Now, let's just put this on the monthly, maybe put it on a different time frame, and maybe it tells you a different picture, right? So we put this thing on the monthly, and again, this does not have volume at the highs. This has volume coming off of the highs the month of January. And so what you can see here, the top of that now is 44.18. I don't recall if that was the same top that I gave you on the weekly chart. You're trading at 46.08. This thing trades to 44.18 or closes inside there. That is also telling you 33.66 is its next stop in price. So that was Q-Core. Let's go take a look at the third dog in the clubhouse here. I don't know why I called it a dog. It's not really a dog. SXCI is the ticker symbol. If you're following along on the home game, that is the SXC Health Solutions. And they provide pharmacy benefit management services and healthcare information technology solutions in North America. So we take a look at this. This had a nice little breakout here. It had a nice gap up. I don't know what happened on April the 18th. May have been the earnings release. I don't see that here, and I'm not going to go ahead and investigate that. Don't need to. All we need to really do is take a look at the stock chart and see what it tells us. And on April 18th, this gaps up with a nice sign of strength, wide price spread, accelerated volume. Now, even though the candle doesn't look that wide, you've got to take into account the gap that was out there. So you got to do a little visualization. And so you've got 13, as I say, on the daily chart, you've got 13 million shares. And the high there, 89.58. You're trading at 93.50. So right now, this thing is doing just a nice little sideways consolidation movement here. Let's continue to investigate this stock. You can see everybody in this stock is pretty much having fun. They're at the party, trading near its session highs. The actual high out there is on April the 20th at $100.50. So now let's go take a look at this on the weekly chart here. And so on the weekly chart, again, showing weekly, you've got volume at the highs. That says that you're going to get that $100.50 mark tested. And so now the question becomes, could this stock pull back? So let's go take a look at the monthly, see what we have out here on a monthly setup on this stock. And again, the highs being the April 30th month. So this stock does not look like it wants to pull back very much. Again, I'm going to switch back to the weekly chart here. And so how you would want to trade this stock is if the market were, now you want to make sure that you're trading all of these stocks really in the direction of the market. And right now, as we know, the market is really uncertain because if you take a look at this week's trading, you've been up, down, and all around. Kind of stole that from Tom. Didn't mean to, but it just kind of rolled off my tongue there. And so right now the market is confused as to which way it wants to go. If the market comes down and pulls back and tests the June 4th area, does it on lighter volume, what it's certainly going to set up is at least a consolidation area, maybe a run to the highs of May 1st out there. And so if you do get the market pulling back into that low, we can take a look what that is. I don't have the number off the top of my head, then you would want to come back and you'd want to take a look at this stock. And this is one that you would want to nibble in trading in the direction of the markets because this thing should want to trade higher. And you just simply have to use some good money management rules. Now, what kind of money management rules? Well, what you would really like to have, that's the wrong thing to put up on the screen. What you'd really like to have access to is the position size calculator, which you can utilize for 30 days for free if you go over to the homepage of TFNN.com. And in the carousel on the left, what you will see is you will see, I believe it says position sizing or something like that. And if you click on that, there's a video. And I'm going to go ahead and use it right here. We're just going to really take a look at SXCI, the ticker symbol. And we're going to go ahead and just see what the average true range is on this. And the average true range on this stock is $3. So if you were going to trade this, your stop has to be outside of $3 whenever you would enter this equity. And it's got to be more than that because, folks, my question to you is, do you think we're in a volatile market? And the answer is going to be, obviously, I can hear you. I can see it actually coming through the lens here on the camera. And the answer is yes. In a volatile market, you need to have wider stops, not tighter stops. In a bull market, you need to in a nice steady bull market, you do not need wide stops from a money management standpoint. But in a volatile market, you need the widest of stops. And the widest of stops, folks, is understanding just simply the average daily volatility. I call that the average true range, as others do, and I just use a multiplier of that. In this case here, I suggest use a 1.618. So that says you're going to be somewhere around 450 or so as your stop. Now, having a wide stop, folks, when you use the right money management strategies, is really no big deal. Your first thing is always to identify risk, and your risk should always be 1% of your trading capital. I don't care how much or how little of the trading capital you have. You want to make sure that you play this game right, and risk management is the key to being able to successfully stay in this game. So that is on SXCI. Let's go look at number 4. Let's go look at our cleanup hitter, at least for this segment. The number 4 stock, Alexion Pharmaceuticals, ALXN. And on the daily chart, you see a nice gap up here on May 22nd, 5.6 million shares. Of course, just like we were looking at the first stock, which was Liquidity Services, had a little bit of a sell-off from a volume standpoint, 4.8 million shares on May 31st. Still not too bad. Let's take a look at this real quickly here on the weekly, see what we see on the weekly chart. Not a bad-looking chart here as well. 877-927-6648. Dow futures. Dow is up about 28 points right now. Composite, though, struggling to get out of the gate. You got Apple down $2, Google off 78 cents. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Dow up 26 points, S&P's up 1.5, and what I've got up on the screen here right now is 3D, DDD Technologies. I mentioned during the opening of the market, they were trading down. They were on my screen up front. They're not really on the top 20 list right now, or if they are, my eyes can't see them, but we're still going to take a look at it. Now, what I do have up on the screen here is the weekly chart. And on the weekly chart, you can see, the last time you had a sign of strength here, and it was only a sign of strength from a volume bar, from the volume standpoint. Certainly was not wide price spread. That was on April 6th, 9.6 million shares. The high there being 25.72. Now, what you're going to want to watch for in this stock here, just as we were taking a look at one of the top 4 IBD stocks, we'll look at more of those certainly tomorrow. During tomorrow's show, is you're going to want to watch to see if DDD closes above 28.85. It's trading at 28.75. Why? Because if it trades below 28.85, it's going to set up a bearish engulfing candle on a weekly basis. That would suggest at least the stock pulling back into that high volume area on April the 6th. Low there, 23.82. Where else does this thing have volume? It's got volume also at the $20.40 to $26 range. Did that on April 29th, 2011. And if we take a look at this stock, also looks like it is in the process. Let's see, on the weekly basis, is it trying to make an A to B equals CD? The B point on this would be the swing point high of April 8th at 29.35. So let's just take a look at this on a weekly chart, get an idea for what it is doing out there. And we take a look at the volume for that week. The volume for that week happened to be at 4.9 million shares. So as price got over that, which would be right here during the week of May 25th, 5 million shares, a little over 5 million shares going against 4.9. So not exactly doing it with massive volume over the B point, but it's a small confirmed A to B equals CD up. But if that A to B equals CD up were to complete, folks, where would that take it to? On the long-term basis, where it would take 3D Technologies to is 36.64. It's trading out at 28.57. Let's pull this over and take a look at the monthly on this. we take a look at the monthly here, you can see it should have pretty decent support here at 29.35. You're trading out now at 28.61. Again, this is the monthly chart. The monthly chart closes inside 29.35. That says it wants to pull back down into at least the $20.40 area. Let's go take a look at the actual S&P index itself. I was mentioning, if you take a look at these stocks, because there's absolutely indecision out here in the market since the low was made on June the 4th. Now, what we do know is that that low does have volume. So at some point in time, that low is going to be tested. If that low were to be tested anytime over the course of the next, whenever it gets tested, you'd want to go back and take a look at, for example, liquidity services. That one was showing, I think that one was showing of the four, that was showing the one with the best opportunity. And if this low here in the S&P were to be tested on lighter volume, that's when you would want to consider dipping your toe in the water. That's assuming that you saw some sign of strength to the upside, because what we do know is we do know that the A to B leg, which does have some volume down at the lows versus volume up at the highs, that the A to B leg has formed. Now we're just waiting for that B to C leg to form. And the question is, how far is this going to retrace? Folks, it's always been great to be here with you. Make sure that you give the greatest gift of all, and we know what that is. That is your own personal development. Hopefully I've helped you this morning, because that was my outcome. Folks, stay tuned. Tom and I will be up next. If not, have a great Thursday. Take care. Bye-bye now.